We're joined now by Ken Courtis. He's chairman of Starfort Investment Holdings, but a former vice chairman at Goldman Sachs Asia. You're an old China hand, as I think they used to say. You know your way around that region. It looks as though the Americans and Chinese are moving tentatively towards some kind of initial trade deal. Is that your read on
That's exactly my read. I think the U.S. is desperate to find an escape hatch to this trade war that's so easy to win. It's been my view, as you know, Andrew, that the U.S. cannot sustain a long-term, full-force trade war with China. The U.S. Doesn't have the structure of government to do it. You know, elections every 2 years, every 4 years. Such a large portion of the U.S. population depends on very cheap goods, and a tax on imports just pushes up their cost of living, and they happen to be Trump's supporters. Corporate America gets paid with options, and if you don't have the stock market going up, those options are worth nothing. So corporate America doesn't want the economy going into the ground, which a real trade war would drive the U.S. economy into the ground. Plus, the U.S. has to borrow money, $800 billion a year. And who are the main suppliers of that money? The Chinese. So the U.S. is going to cut a deal. They'll call it phase one. The big idea is we're going to transform China. China's going to become in 18 months like America. That's all gone. Now it's pure trade. And it's going to happen, and it'll happen, I think, this year. Probably it's a little tied up at the moment with the impeachment process, but I think over the midterm, the impeachment process is going nowhere also. So trade will come back. Trump knows he needs a strong economy to get elected, and 2% growth like the U.S. has now isn't going to do it.
Obviously, the longer-term picture is a struggle between America and China for world dominance in technological areas, for example. But they will be able to reach some kind of a preliminary, maybe paper over the cracks deal.
We'll be at this for 20 years. There will be moments of great tension, like we've had in the last 18 months, and there will be moments of relative calm. But we have a change of the guard that's occurring globally. China's going to be bigger than anything we've ever seen. And the U.S. has got to come to terms with that. At the same time, the U.S. is really caught with almost imperial overreach. They're overcommitted relative to their finances. The reason they're running such a big trade deficit is not because of China. It's because they have a net savings shortfall in the domestic economy. And the deficit just represents that, reflects that. And that deficit's about $800 billion. Trade deficit's $800 billion, and it's getting bigger because the debt in the U.S. is getting bigger. So what's going to happen midterm? I think China will continue to grow 5.5%, 6%, which on a $14 trillion economy is another $1 trillion every year of new growth.
It's pretty amazing, yeah.
It is amazing. Trump says U.S. is doing so well. Yeah, it's growing about a third of the pace that China's growing at. And I think through the next presidential term, we're going to see a major devaluation of the dollar. I think that's the only way, really, the U.S. can deal with this external problem they have.
A major devaluation. So holders of all those trillions of dollars of U.S. bonds won't be thrilled to see that, presumably.
That's right. You know, in previous centuries, we did that through war and expropriated other people's assets through war. Today, we do it through financial markets.
So could there be a crisis of confidence in U.S. debt, the U.S. dollar? People just abandon it wholesale?
I think at the moment and well into beyond next year, 2020, 2021, I think the dollar is going to be pretty stable in the current broad trading range of where it's been against the euro and the yen. Mm-hmm. But midterm, like in the mid-1980s when they devalued 35 to 40%, I expect them to do the same in the early part of the next decade.
Can we switch just back to the trade deal for a second?
Sure.
Because I want to get your take. David McNaughton, a former Canadian ambassador, told us that he thinks the detention of the Huawei CFO is so exasperating to China, such an irritant, that that'll have to be settled before either Chinese and Americans can reach a trade deal.
You know, Trump's expressed his view pretty much on that from the beginning.
He sees it as a trading counter, I think.
For him, it's a chip. It's a bargaining chip. How Canada got itself into this situation is beyond me. Former Prime Minister Trudeau, in other words, Trudeau's father, said that Canada's like a mouse in bed with an elephant, speaking of the US. Every time the elephant twitches, the mouse has to be extremely careful. But when the mouse twitches, the elephant doesn't notice. So why we put ourselves in between two elephants that are charging at each other is beyond me.
What about the argument, well, we got to go by the rules. We're a country of rules.
Well, one of the rules would have been to tell her she couldn't get on the airplane in Beijing. They knew 3 days before she left. Or the police could have showed up in Vancouver airport. She just slipped out of her hands 5 minutes after the airplane took off.
That's how things are done, in fact, in the real world. Yeah. What was that, just ineptitude?
It's inexplicable to me that at the moment that we tried to engage the Chinese on a new trade agreement, to start a negotiation, it doesn't make sense. Some people think that Trump tricked the Canadians into it, whatever. We'll get over it. The Chinese will get over it. But it's one more hill to climb.
Let's turn to the broad equity markets. Do you think there's a good case to be made that stocks will gain another 15 to 20% by the end of next year?
Correct.
What will lift them that much higher?
Well, I think that the pause that we've had in the global economy is now coming to an end, and we'll come out of that very nicely through 2020. Stronger growth will be good for earnings. Number two, Andrew, I think that interest rates are going nowhere. There's no inflation on the horizon. The Federal Reserve is back into quantitative easing and lower interest rates. The ECB is the same policies. The Bank of Japan has the same policies. And the Central Bank of China essentially has the same policies. So we're going to be throwing fiscal stimulus, and I'm sure Trump is going to announce a new tax cut policy for his election campaign, and the anticipation of that will drive things. And very aggressive monetary policy. It's going to force people to put money into risk assets because the most overvalued asset in the world today are bonds. They've been on this 30-year bull market, or even longer now, going back to the mid-1980s. And, they may go a tiny bit higher, but relative to where they've been, bonds are not a place, except for some of the high-yield Asian bonds. Bonds aren't a place you're going to make any money.
Too much money has flooded in.
You're going to have to be into equities. You're going to have to go out the risk curve, and that's another force that'll be driving the market. So low interest rates, actually negative real interest rates, fiscal stimulus, rebounding economy, quantitative easing, and people are being squeezed out of an overpriced stock market into risk assets.
Why has inflation not come back? Why has monetary policy broken down over the past decade?
It's broken down in some countries, like some of the European countries and Japan, in part because of demographics. If you're 65 or 75 and interest rates go from 3% to 1%, you aren't going to rush out and buy 2 new cars or 4 new suits.
No.
You're sort of interested in using the money that you have. I think number two, technology is making huge changes. And number three, we have a global labor market. So if you're producing bumpers in wherever, Upper Rubber Boots, Montana, at the same technology and the same intensity as someone in India or China, you know who's going to win? The guy who's got the lowest salary.
Yeah, and obviously, with Alibaba, if nothing else, you can just source the goods so easily.
Yeah.
We'll leave us with a final prediction. For us here in Canada, are our living standards going to get better in the decades to come?
They won't get better automatically. It's going to take conscious policy, determined strategy, focus. Andrew, growth in the world economy is more and more dominated by big urban areas. By 2050, 80% of global growth will be coming from 100 cities. 20% of growth is going to go for everybody else in the world.
They'll stagnate relatively.
So that means great urban areas like Vancouver, Montreal, Toronto, Calgary, Edmonton. They've really got to get focused because they're in global competition. It's no longer Canada versus France or Japan
for
or
talent
China.
And,
It's these great urban areas. And so what you need lots of education, you need lots of the right infrastructure, and not just roads.
And cultural stuff to do
Exactly,
as well.
cultural infrastructure.
Yeah.
You know, your education today is your economy tomorrow. And we've got to get critical mass in the key areas that are going to drive the economy tomorrow.
Ken, we could talk to you all day. Thank you very much indeed. Ken Courtis has been our guest today.